Today's update is important and time-sensitive. Federal authorities have officially confirmed that a round of stimulus-related payments will be issued on February 28th, and many seniors across the United States are now waiting to see whether they qualify and when the money could reach their accounts. This development has created a lot of discussion, especially among retirees who rely on Social Security, SSI, SSDI, VA benefits, or small pensions to manage rising living costs. In this video, everything will be explained clearly and calmly so that you understand what has been confirmed, who may be eligible, how the payment process works, and what steps you should take to protect your benefits and avoid delays. The confirmation of February 28th payments comes at a time when many households are still adjusting to higher grocery prices, medical costs, insurance premiums, and housing expenses. While this payment is being referred to broadly as a stimulus, it is important to understand that stimulus payments are not always brand new programs created from scratch. In many cases, these payments are tied to tax credits, recovery rebate adjustments, or previously approved relief measures that are being processed through the tax system. That means the Internal Revenue Service is responsible for distributing the funds, even though the impact is most strongly felt by retirees and lower-income households. For seniors, the most important issue is eligibility. Many older Americans assume that if they receive Social Security retirement benefits, supplemental security income, Social Security disability insurance, or veterans benefits, they will automatically receive any federal relief payment. While that has been true in certain past programs, eligibility always depends on specific income thresholds, filing status, and tax record updates. The February 28th payment is being processed through federal tax records, which means your most recent tax filing status plays a major role in determining whether you qualify and how much you receive. Income limits are central to stimulus-style payments. In general, federal relief programs are structured to prioritize individuals and households below certain adjusted gross income levels. For single filers, eligibility typically begins to phase out once income rises above a moderate threshold. For married couples filing jointly, that threshold is higher. For heads of household, it falls somewhere in between. Seniors who live primarily on Social Security often fall below these limits, especially if they have limited additional retirement income. However, retirees who draw from pensions, investment accounts, rental properties, or part-time employment income may need to review their most recent tax return to understand where they stand. Another key factor is filing status. Individuals who have filed their most recent federal tax return are generally processed automatically based on the information on record. For those who are not required to file taxes due to low income, federal authorities have in the past relied on benefit agency data to issue payments. However, if there have been recent changes such as a new address, new bank account, change in marital status, or the addition of a dependent, the accuracy of the payment may depend on whether that information has been updated with the appropriate agencies. For seniors receiving Social Security retirement benefits, the good news is that federal systems are typically coordinated. When stimulus-related payments are approved and processed, the Treasury Department works alongside the Social Security Administration to issue funds either through direct deposit or paper check, depending on how regular benefits are delivered. If your Social Security benefits are paid via direct deposit, any eligible February 28th stimulus payment would usually follow the same method. If you receive benefits by mail, the payment may arrive in paper check form, which can take longer. It is also important to clarify that a February 28th issuance date does not necessarily mean every eligible person will see funds in their account on that exact day. Payment processing occurs in batches. Some direct deposits may post immediately, while others may appear within a few business days. Paper checks can take significantly longer, especially depending on mail processing times and geographic location. Seniors should remain patient and avoid assuming a problem if the deposit does not appear instantly. One area of confusion involves the difference between a stimulus payment and a tax refund. In many cases, the two may be combined. For example, if a retiree qualifies for a refundable credit tied to a previous relief measure, that credit may be included as part of their overall tax refund. In that situation, the February 28th processing date may reflect the release of funds that include both standard tax refund amounts and stimulus-related adjustments. This is why some seniors may see a larger than expected deposit if they recently filed their tax return and qualified for additional credits. Retirees who recently moved into assisted living facilities or nursing homes should ensure that their mailing address and banking details reflect their current situation. Delays often occur when payments are mailed to outdated addresses. Similarly, Seniors who have assigned representative payees for benefit management should verify that those arrangements are current and properly documented. The psychological impact of confirmed federal payments should not be overlooked. Financial uncertainty creates stress, especially for older adults living on fixed incomes. Clear communication from federal authorities helps reduce anxiety and allows households to plan responsibly. A confirmed date, such as February 28th, provides a concrete reference point around which budgeting decisions can be made. It is also important to remember that stimulus payments are typically designed as temporary relief measures rather than permanent benefit increases. Unlike annual cost of living adjustments applied to Social Security retirement benefits, stimulus payments do not automatically repeat unless new legislation or authorized credits are approved. Seniors should avoid structuring long-term financial commitments around a one-time deposit. Tax preparation during this period becomes especially important. Filing electronically and choosing direct deposit remains the fastest way to ensure any eligible credits are processed without delay. Paper filings can take longer to process, which may push payment timelines further into the season. Accuracy is equally important. Errors in Social Security numbers, filing status, or bank account information can cause processing holds that delay funds significantly. Another area of interest involves retirees who split income between multiple sources, such as part-time employment and Social Security. Income fluctuations can affect eligibility thresholds. Seniors who earned more in the prior tax year but have since stopped working may find that filing a current return reflecting lower income improves their eligibility for full payment amounts. For those who have not yet filed a tax return but are required to do so, acting promptly may help ensure inclusion in the February 28th processing cycle. Federal systems rely heavily on electronically submitted information to calculate credits and authorize deposits. Delaying filing may mean waiting for a later processing date. In summary, the confirmed February 28th stimulus payment represents an important development for many American seniors. Eligibility depends on income, filing status, residency, and accurate records. Payment timing varies based on deposit method and processing cycles. The funds are generally not taxable and historically have not reduced Social Security retirement benefits. Protecting personal information remains essential to avoid fraud. Most importantly, understanding how the payment fits into your broader retirement financial plan ensures that temporary relief provides maximum benefit without unintended consequences. As this February 28th payment date approaches, many seniors are also thinking about how it connects to the larger picture of retirement security in the United States. Federal benefit programs such as Social Security retirement, supplemental security income, Social Security disability insurance, and veterans benefits form the foundation of income for millions of older Americans. However, these programs were never designed to cover every possible expense without additional planning. Stimulus payments, when confirmed and issued, are intended to provide supplemental support during periods of economic pressure rather than replace regular income sources. Inflation has been one of the most significant concerns for retirees in recent years. Even moderate price increases can create challenges for households that rely primarily on fixed monthly deposits. Cost of living adjustments applied to Social Security benefits are calculated using specific inflation measures, but individual expenses do not always rise evenly. For example, healthcare costs often increase at rates that exceed general inflation. Prescription medications, specialist visits, medical equipment, and insurance premiums can consume a large portion of monthly income. A stimulus payment can help offset some of these short-term pressures, especially if directed toward high-priority needs. Housing costs represent another area where seniors may feel financial strain. Property taxes, homeowners insurance, rent increases, and maintenance expenses can place pressure on retirement budgets. For those living in rental housing, lease renewals sometimes bring higher monthly payments that must be absorbed without a corresponding increase in income. A confirmed federal payment can provide temporary relief that helps stabilize housing situations and prevent the accumulation of overdue balances. Energy expenses also fluctuate seasonally. During colder months, heating costs can rise significantly, particularly in regions experiencing extreme weather. In warmer climates, electricity usage may increase during summer due to air conditioning needs. Seniors living on limited incomes often face difficult choices between comfort and cost. An additional payment can ease these pressures and allow households to maintain safe living conditions without sacrificing other necessities. Medical debt is another reality for many older Americans. Even with Medicare coverage, deductibles, co-payments, and uncovered services can create financial burdens. Some retirees delay elective procedures or necessary treatments due to cost concerns. A stimulus payment arriving at the end of February could be used to address outstanding medical bills or prepare for upcoming healthcare expenses. The structure of federal payments typically relies on electronic systems that are designed for efficiency. Direct deposits are routed through the Treasury and appear in bank accounts in coordination with financial institutions. Seniors who monitor their accounts regularly may notice pending transactions before official posting. However, variations in bank processing times can affect when funds become fully available. Patience is important, as processing windows can differ slightly between institutions. For those who receive payments by mail, timing may vary more widely. Postal delivery schedules, regional processing centers, and local conditions can influence arrival dates. It is advisable to check mailboxes consistently and store financial documents securely. If a check does not arrive within a reasonable time frame after the confirmed issuance date, contacting the appropriate federal agency may be necessary to request a trace. In addition to understanding payment logistics, seniors should consider financial planning strategies that maximize the impact of temporary relief. Allocating funds toward high-interest debt, urgent medical needs, or emergency savings can strengthen overall financial stability. Even modest savings cushions can reduce stress and prevent reliance on high-cost borrowing options in the future. It is equally important to remain realistic about the scope of federal relief. Stimulus payments provide short-term assistance but do not eliminate the need for ongoing financial management. Retirees should continue to review monthly budgets, monitor recurring expenses, and assess insurance coverage annually. Regular financial checkups help ensure that benefit income is being used effectively. Seniors who recently experienced major life changes should pay special attention to record updates. Marriage, divorce, the death of a spouse, relocation, or changes in dependent status can all influence payment calculations. Federal systems depend on accurate information to determine eligibility and issue correct amounts. Keeping records current reduces the likelihood of delays or adjustments. Fraud prevention remains critical during periods of heightened attention to federal payments. Scammers may attempt to create urgency by claiming that immediate action is required to secure funds. Legitimate federal agencies do not demand upfront fees or threaten loss of benefits through unsolicited contact. Family members, trusted financial advisors, and local senior service organizations often assist with tax preparation and benefit coordination. Seeking reliable guidance can prevent misunderstandings and reduce anxiety. The broader goal of federal stimulus measures is to stabilize household finances during challenging economic periods. By injecting funds into local economies, these payments can also support small businesses and service providers. Seniors who spend relief funds on essential goods and services contribute to economic circulation within their communities. It is important to remember that eligibility determinations are based on documented criteria rather than personal circumstances alone. While many retirees face financial pressure, only those who meet specified income and filing thresholds will receive full payments. Understanding this framework helps set realistic expectations and reduces confusion. As February 28th approaches, seniors should review their recent tax filings, confirm their banking details, and remain attentive to official announcements. Clear preparation minimizes uncertainty. The confirmation of stimulus payments provides reassurance that federal authorities recognize ongoing economic challenges faced by households across the country. Conclusion. In closing, the confirmation of stimulus payments scheduled for February 28th represents meaningful financial relief for many seniors in the United States. Eligibility depends primarily on income levels, tax filing status, and accurate federal records. Payments are generally processed through direct deposit or mailed check, and timing may vary slightly depending on individual circumstances. Historically, such payments have not reduced Social Security retirement benefits and have not been treated as taxable income. Understanding the details behind the payment allows retirees to plan responsibly and avoid unnecessary stress. Reviewing tax records, ensuring that personal information is current, and remaining cautious about scams are practical steps that protect both finances and peace of mind. Temporary relief, when used thoughtfully, can strengthen household stability and address urgent needs without creating long-term complications.